right, good morning, everybody. Time to go to work at 6:30 on Wall Street, 3 hours before the open of trading. Welcome to QuantBox Live, where you get your global macro on and uncover the best fundamental opportunities across global markets. My name is Wayne McDonald. I'm the founder of QuantBox because I'm an economist and I wanted to automate everything. Our AI-driven data analysis of sentiment, inflation, employment, GDP, technical trends, open trade positioning, seasonality. And we've actually added a whole bunch more over the last 6 months to a year. That is a lot of information, and it's all aggregated and then displayed in a way that a human could even understand. So if you're a retail trader and you're not adding automation, you're staying small. You have the opportunity with QuantBox to think and trade like a institutional investor, like a billion-dollar hedge fund that hires quants and does deep data research. It only costs them, I don't know, $1 million a year. Will it cost you $80 a month? You're like, all that information, all that data, it looks good. Yeah, but you know what you get for $80 a month? Confidence to let your winners run because your trades are not like, I don't know, a chicken with its head cut off, running around in circles, making a bloody mess of everything. Instead, you're cold and calculated. You're focused and driven. You know what's going on, and that's why you're placing your trades. So, like, for example, look at this. How simple is this? On the left, all the retail positioning. On the right, all the institutional positioning. Are you trading with the crowd or against the crowd? Or are you just the monkey in the middle? Anyways, visit quantbox.co. Sign up for the $8 trial. Let me remind you that trading is risky. Not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, right? Never risk money you cannot afford to lose. If you're watching this on YouTube, you're watching it many hours delayed. In fact, half the time I forget to even upload the video. So, like, if you're watching this on YouTube, join us. Stop being a lurker. Kick down, come clean. Don't be a holdout machine. You know you want it. Okay. All right. So, anyways, let's get going, cool kids. Let's log in to the database. Log in into the Google Cloud. All right. So yields are still coming down. Remember, that's a good thing. I think. I mean, it's a healthy thing. I don't know if it's good, but it's healthy that investors are buying treasuries. That's what makes yields go down. Cool. So that's going in the way that I need it to. So I'm happy. Oil made it to 75, y'all. Wowzer, huh? Weren't we just at like 85? Weren't we at 92? So welcome to 75, everybody. Gold still stuck basically at 2000. S&P 500 hasn't done much, nor did the NASDAQ. We just hung out. We knew it was going to be a quiet week and a sideways week. I thought we were vulnerable to the downside. We have a Q&A with Jay Powell today that maybe enlightens people to their irrational exuberance. But I don't mind up, but I think we're vulnerable today. That's all. If the S&P 500 comes down today, euro dollar is going to come down with it. And we're still basically stuck at 107. Okay. Bitcoin doing well. There's more stuff going on in the crypto world in regards to ETFs. And I think now we're in a window of where the SEC has to say something. And, anyways, we're a long ways away, I think, from a big announcement, but maybe it happens. And that's why it's way up. If you don't recall, I think we were at 20,000 recently. So 36 is way up. Okay. So for those that bought Bitcoin for $1, I'm very happy for them. Yeah. Yeah, I remember Bitcoin at 1,000 and I didn't get it. Just but you couldn't even it was even hard to go get one. Like, I want a Bitcoin. What do you do? Like, that was a big problem. So anyways. All right. Risk gauges. Well, first of all, you can see everybody's flat here. Let me do the zoomy zoom zoom. Okay, the zoomy zoom zoom. Oh, it's so pretty, isn't it? Yeah. Anyway, zooming in here, you can see everybody flattened out or even took a little down yesterday. Okay. I'm just trying to get in that most recent data. Okay. Do, 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 do. Okay. So going back all the way to the 1st of January, this is kind of where we're sitting. Okay. Japanese stock market still quite up. So your focus, Japanese stock market, German stock market, the tech market in the United States. Kiwi CAD. What the heck is that? Okay, we got a crossbear in there. Aussie yen, very interesting. Now you're buying the Japanese stock market and selling the British stock market. That's cray cray. Apparently, no love for Canada. So Kiwi up, CAD Swissy down. Okay, that's risk off, by the way. Oil is bearish, although that number is way off. So I don't know what's going on there. I'll have to double check that. But nonetheless, there's a quick snapshot. You could take a deeper dive even further. See, look at like there's very few things bearish, lots of things neutral, lots of things neutral. But these ones, you know, you need to pay attention to say, are they drifting this way? Are they drifting into neutrality or are they drifting into bearishness? That's the trick, though, isn't it? Hmm. Okay. Very bullish, bullish, bullish. Okay. Sell the CAD, sell the CAD, sell the CAD. Yeah, CAD's getting crushed. Sorry, Canada. I love you, eh? But I got to sell you. Retail's heavily long CAD versus Swiss franc. Hmm. This week. Well, I guess I could just pull up the CAD. Let's just look at the CAD. Hmm. Okay. Ooh, ooh. So I have an indicator on this chart that automatically draws the trend line. It looks like a pivot point. That's anyways, be careful, eh? Let's go further. Ooh la la. Oops. Uh-huh. Hmm. Goes even further out, huh? Oh, well. I guess there's not a lot of meat on this bone, huh? So we're so close to the bottom that even though it has a pretty powerful sell score. I don't know if I want to know. Um, there's at least one more hurrah in this, right? So you got a sincere bear. Remember, QuantBox said bearish. Yeah, you got what? One more. Last day, everybody. Last day. There to there. And then take it a break. That's what it says. Maybe, right? So last chance. So even though it's got a big economic score, I think that technical trend, and please forgive me when I say this, is waning. Yeah. So, anyways, maybe one more hurrah. Okay. Go back to the QB. Another way you could look for trades. So you can look for trades here, and just while we're here, the typical rule of engagement is the COT data is long-term positions. Like you'll say, oh, gold has been down for the last 2 weeks. Yeah, well, institutional investors are buying the dip because they're going to be in for 2 years, not 2 weeks. Okay. They're not trading a 15-minute chart. They're not looking at the MACD. Okay. And then over here is shorter term money. Traditionally, it's called dumb money. I prefer short term money versus long term money, right? And anyways, very often this is wrong because it'll be long for a while because of relative strength, but ignoring the fundamentals, and then of course then the fundamentals kick in, and then these things crash. So, anyways, when you see over here, CAD Swissy is heavily long by retail traders, you probably want to look to sell it. And as we just looked, yeah, there's one more down day, and then the risk really increases. Well, it probably may or may not change the positioning here. You just know as smart money in the form of good technical analysis that you get one more maybe, and then risk increases, and then maybe you let the retail battle it out for a while. But they're heavily long, and it's been falling for days. So one might think when we hit that support, right, it's going to go up, and then the retail will get out at the bottom instead of staying long. So, anyways, and on the flip side of that, okay, you can look at yen. They're heavily short. Retail is heavily short the yen pairs. Yet the Nikkei is one of our best performing assets, and when the Nikkei goes up, the yen weakens. And so, why are they so long again? Why are they shorting these yen pairs? I don't know. Can't figure that out. Doesn't make any sense. So, anyways, that's one way of looking at it. All right. I showed you the scorecard summary. This is another way of looking at it. A third way of maybe finding some trades is you go to the COT and you pay attention to not the positions but the flow, okay, which is different. Not the total number of positions, because that's a longer term, right? But the flow of capital week over week. Where did the money go? And money went into Aussie, for example. So you're like, oh, I guess this week I'm Aussie long. You see? Now, these are long term positions. And sometimes using a technique like this, you're like, okay, I'm interested in looking at Aussie. And then when you look at it, Aussie is falling. Because remember, this is a week or so old. It's the newest data. but it really is sort of last week ish. So what day is it today? Thursday? This came out Tuesday last week, reported Friday last week, and is updated tomorrow. Okay. So quite a while ago, money is flowing into Aussie. But the thing is, for quite some time, that hadn't been happening at all. So you could look at that. Okay. Gold is slightly long. Okay. And then when we switch to the flow of capital out, look, actually, even though the Japanese stock market is heavily positioned long, significant money has come out of that asset. So it's going up, but with less bulls. Actually, with more bears, but when we net it out, you can think of it that way. Okay. So let's just say a week and a half ago, significant money came out of oil. Oh, wait, did oil fall $10 since then? Yeah, kind of interesting, huh? You like the rand? Institutions are getting out. That's risk off, by the way. All of that is risk off. Money coming out of those markets, that's risk off. And yet we still have an elevated US stock market. I get worried about such things. Silver, you can be maybe a bear on silver, maybe you can be a bear on Bitcoin. Remember, you're following the flow of capital. You can see here an increase in short positions. Okay. And then there's the change in long. Okay. Wowzer. Big difference. When you look at silver, it's quite different. There's hardly any new bears, but they lost a lot of bulls. You see how there can be a difference? Okay. Like going back to oil, not only did oil lose bulls, which is bearish, okay, look at how many contracts went actually short. There's significantly less bears and significantly less bulls and significantly more bears. It's like a double whammy. It's not like everyone's just taking profit and leaving the market. No, they're actually selling. They're making money on the way down. Ooh la la. Isn't that interesting, huh? Check this out. Here's the yield on the 10-year. I'd like to think that I'm part of this report because during this period, I actually, was involved making a money. But look at that. How many contracts went short yields? Yeah. Wowzer, huh? Anyways, but in that case, they're actually shorting. They're not shorting the yield, they're shorting the price. Anyways. And yeah. So anyways, so there's another way for you to like zip around and just try to, decide how do you want to set up your trades for the day. And you might say from looking at that, like, oh, maybe the Aussie, right? Maybe the Aussie. Okay. All right. So we can go back to here. Remember when we were at the top? Yep. Now it's moving down, 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 down. Target would be the bottom here. Now you might say, well, I think it's going to go up. Okay, that's fine. You can't plan for it. Okay. Oh, I rebooted, so I don't have a drawing tool. Let's see if it'll actually start first try. Oh, it did. Wow, they fixed it. Good, an update. That actually worked. All right, so let me finish my thought here. Let's say you think this. So then you're going to say, well, cool, Wayne. So this is your buy zone based on pivot points, right? Yeah. So I should buy it here, right? Nope. Oh, but Wayne, the 2150, nope. No. You're applying a trend strategy in a range bound market. As far as I'm concerned, okay, we're going down to here. Now, if it goes up and it's a trend, you need to remind yourself by definition, that means it's going to go up for a long time. So don't worry about it if you don't get here, don't worry about it. It's going to make higher highs and higher lows and another higher high and another higher low. Like, don't worry about it. Reduce your risk. So if it's going to do this, let it do it. But right now, it's probably, that's okay, probabilities that it's just going to stay in the range. And the way I teach this is it'll trade sideways forever and ever and ever and ever and ever and ever and ever and forever until it breaks out. Okay, I've been training that for 20 years. It's going to move sideways forever, bro. Forever until it breaks. Your job isn't to guess that it's going to do it or bet. It's even worse. It's a bet. I bet you it goes up from here. Yeah, not interested. Try Vegas. Yeah, try Vegas. Not interested. Um, but if it does, then I can set up a trade. So let's say it does. Sweet. Sweet. Now we're up here. Great. Now your job is to do one of these and go along here. Sweet. Now you're doing your job. We don't need a magician. We don't need a clown. We don't need a gambler. We don't need someone could do party tricks like, I'm going to bet this goes up. Not interested. Pass. Okay. We're traders and investors. And the probability is we're going to head down here. That's just technical analysis, by the way. Now, you might say, well, based on the fundamentals, well, good. Prove it to me. Okay. You have tons of time. You have all the time in the world. Okay. Okay. You're never late for a trade. So I just want to pull up that QuantBox. Yeah, what did we have for the Aussie? Boop. Yeah, so money moved into Aussie. And I want to stay away from the US dollar being the reserve currency. We could look at pound Aussie. Okay, pound Aussie. Okay. Yeah. And I'm going to adjust this. Okay. Adjust this to about here. And that's about right. And then I'm going to put one here. Okay. And the theory is what? We head down. So a week and a half ago, we got that updated COT data. Now, the CFTC got the updated data. We didn't get it till Friday, but I already put this trade plan together. It's already been done last week when the data was fresh. And what the data suggested is obviously money flowing into Australian dollar. And it should go this way, is the idea, the flow of capital. In particular, if you're bear on the Great British Pound, and I am. Now, we know things have happened fundamentally since that trade plan. Aussie was strong for a while because there was sort of by the rumor idea of the RBA raising interest rates, even though they didn't really want to. And they did. And it was strong until that moment that it was dead. They jacked up interest rates and it died instantly. Okay, well, but maybe I don't know, we resume some sort of trend, maybe. And that's our job as traders is maybe. Well, if this double bottom holds, what this chart says is the top is here, and that's the next level of the range. That's an S1 R1 inside month. Okay. So we'll see. So now I'll zoom back in, and that next level is a little higher. Let me show it this way. Okay. So what I was showing earlier was this was the pullback. Okay. This is the S1. The R1 is up here. Okay. And that would be the bigger range. So there's two ranges being played here, depending on what time frame you're on. That's the bottom of the range, and that's the top of the range. So you could have like the blue area. Let me change it and do it black, or it does one of these things, this range. Okay. So if you want to be a bear, you have a plan A. If you observe a reversal pattern to the downside, you have permission to engage to the south side. And the next one is way up here, so we might as well call it like an R1. Okay. And if you look at the weeklies, M2 is predicting M4, and that's conservative, and this is aggressive. So it's even possible we get that this week for Plan B. Plan B is possible for sure. I mean, it's in the cards. So again, if you're a buyer at this point, no, I wouldn't have been, but somebody bought a double bottom. That's fine. The most aggressive target that trader could possibly have is this price right here. And it just happens to be the top anyways. Thank you, pivot points. So then a longer term trader that's looking at this on a daily chart can look at plan B as simply the short that takes it down. Or you just say, this is a vulnerable currency because of its exposure to China risk, and China's not doing well right now. That's, in my humble opinion, that's why oil is at 75. And the Great Britain's in serious economic trouble, and both of these are just going to move sideways forever. Right? Euro Aussie, how does that look technically? Mediocrity, huh? Do my fib from here to here, and it's basically a 618, which gets us maybe to a 1382. But you can see I've done all this. And it hasn't worked, but it hasn't not worked. So the general plan, and I've done it before, but you could do this as a role reversal type entry, which I have. The second thing that you do is, if you're going to use Fibonacci, you go from peak to valley, and you highlight the 382, the 50%, the 618. The way I teach it is that's your buy zone. And the trade plan here is higher high, somewhere in the trade zone, higher low. So it hit a 618. 618 predicts a 1382. And I think that's it right there. So it's not good. It hasn't not worked. Aussie money went into it, but it seems to still be bearish. Not enough money. Or that institutional money went in on the buy the rumor, sell the news type scenario. Nonetheless, technically it looks up, doesn't it? In particular on this one. It's hard though, especially when you're on a 15-minute chart and an hourly chart all day. After 3 days, it feels like 3 years, doesn't it? After 2 weeks, it's a lifetime. And if you just back out on the daily, you're like, yeah, all we did on this one is a 618 Fibonacci retracement. It's not going up very quickly, but it is. It is going up slowly, slow as molasses on a cold Georgia morning. And it's cold these mornings, huh? We had our first fire last night. Nice evening fire. Isn't that nice? Cold. Got to get the brandy out soon. Got to wash the sniffer glasses. So, anyways, it's not going up, but it's not falling either. And so, anyways, we'll see. So, maybe another neutral day. Well, two things to watch, and really, it's the same thing as yesterday. Hey, I don't make these markets. Same thing as yesterday. We have to pay a lot of attention to the stock market. It's not falling. It is going up. I'm grateful and thankful for it. Um, I don't trust it at all. I'm happy, but I believe it's irrational exuberance. But trust you, me, being right is not profitable. There are plenty of people that have been right in their predictions and trade against the market and lose all their money. All right. So my point here is I think people are irrational. I don't think they interpreted what Jay Powell said correctly. But the market's going up. So I'd be a fool to be selling this. But I'm sitting here going, it's going to fall. It's going to fall. It's going to fall. And I hate having that opinion when it's moving sideways. Oh, it's worse. Huh? It's like waiting in the lobby for your root canal, right? And you hear the drill from somebody else, and they're right. I swear to you, one time I had eye surgery, and so a patient came out right before me, crying, crying, in tears. You're like, no. Yeah, I had a buddy. He chipped a tooth or something in like Hungary, so he's in like Budapest, and he goes to a dentist and he walks in and he's like, it was just a horrible institutionalized, it looked like a prison sort of lobby. And he's sitting there waiting to do this. And he's like, I don't like this place. I don't like this place. And then he goes in and there's blood on the dentist seat. And he's like, no, I'm going home. I'm going to take my chipped tooth back to America where they have massaging chairs and no blood stains, no water stains on the wall. So, anyways, so that's how I feel, right? I'm like, this is going up, but I feel very uneasy. So today, Jay Powell is doing Q&A. It's not like an official. I mean, they're all official, but it's not an official like Fed meeting. He's speaking to, I don't know, some group. But there will be Q&A. I don't think he's going to tell us anything, but he might do something. He might say it wrong. He might bumble it. He might make a mistake. Maybe he does want to make a statement now that the stock market's rallied, and he says something like, "I don't want the stock market to rally. It's inflationary." I mean, I don't know, right? Like, what's my risk? He says something like, "Yeah, we're done raising interest rates, and in fact, we want to cut them as soon as possible." Okay, the stock market rallies. I'm already in, bro. I'm cool with that. I don't think that's likely at all. And if anything, and I said this yesterday, he walks in with a bucket of ice water and he throws it on the audience, and he's like, "You guys are irrational. You're not even listening to me. The stock market has rallied too much too quickly. It's not helpful." right? We're not cutting interest rates. Now, again, I don't think he's going to say that, but I do believe he'll say that they could raise, and they haven't talked about cutting, and these cuts that are being priced in ahead of the SEP, he could just say, we haven't talked about that, so why are you pricing it in? Now, in my humble opinion, on December 13th, we get a new SEP, and I think the dots are going to show less likely of a cut next year. Not a cut sooner. The cuts are going to be pushed off. So let's just say we're done raising interest rates. It's possible. Okay. But they're not going to cut next year. That's what I think. But again, what I think is irrelevant. What I'm assuming is going to happen soon is the SEP dots are going to shift. And that's not priced in. The opposite's being priced in. The dots are going to shift to the right, not to the left. Moving the dots to the left is what's being priced in now, creating this irrational exuberance. And that's why I don't trust it, because I think people are guessing and they're hoping. And like I said to you, I don't like degenerate gambling when it comes to, my assets, my net worth, my retirement money. Right? I don't want to work at Starbucks when I'm 80 just so I can get day old muffins. So I can't guess. So, anyways, it's going up. That's great. Today it could change. I hate that though. I hate that where today something might change. I don't like that. I'm trying to catch trends that last for years. So like being concerned about one day, but we are at that price. And then I'll leave you with one last thought on that. When we look at NASI's even more toppy. And remember, it's got the higher volatility. So if it drops today, it's going to drop more than everybody else. And I mean, look, this, look how precise it is. 2 standard deviations above the mean. It's been important in the past. Okay. Now remember, to get this is where you calculate the negative var and uh, uh, the variability. And there's a positive one and there's a negative one, and then you square it so that you can get this distance from here to here, and then have that distance from there to here. That's why you do that. You take the variance, right? So you have to have the mean, and then here's the var, the variance, the variance, the variance, the variance, the variance, which is just the distance from the mean. And you're doing all these variance calculations. Variance. How far does price deviate from the mean before it reverts to the mean? Variance, 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 variance. Calculate that number. So now you got your variance. Okay. And then you take the square root of that. And then therefore you get this distance from here to here, and then this distance from here to here. So now it's standardized. Very cool. The deviation is now standardized, but look at the precision. Okay. And then we look at it fundamentally, or I mean, technically using just price. And doesn't this sort of reek of resistance? So, yes, this might go higher. And it might go higher. It might. Let me just put it this way. It might. It could. It just hasn't done it in these market conditions in the past. Doesn't mean it won't happen in the future. If it was going to happen to an asset class, I would say it would happen to the stock market. I always remind myself, everybody makes money on the way up. And stock traders are dumb, right? Compared to forex traders, compared to bond traders. Right? So here's what I think could happen if everything's good today. It pops up, and why do people buy the Nasdaq? Well, we know having traded other assets, we know the golden rule. There's no golden rule, but one of the key tenets of being a good trader is you never buy high. So what would a stock trader do? They buy it because the NASDAQ rallies 3 standard deviations from its mean. Now that's the reason to buy it, because everybody's buying it, right? Because they don't care about entry. Someone's going to buy it and hold it for 20 years, right? So they're going to buy it because it rallied 8%, not because it rallied 8% and then gave you a 382 Fibonacci retracement. So, but here's the risk today. Jay Powell says, you know what? You guys are irrational. You're trading based on hypotheses of things I didn't say. Guessing, gambling, hoping. Okay. And I would say we would head in that case back to 14,500, let's say. And then what we would do is start shifting the slope of the mean so that the slope then becomes neutral. And then maybe we go back up. Who knows? Who knows? I don't know. I don't know. I'd prefer this to go up because that's seasonal. Honestly, what I expected weeks ago, me personally, what I expected was this by now, and that the shift. Okay, so right, so what went wrong? This is geopolitical risk right here. That's the October 7th was here, right? So this is when Hamas attacked Israel. And again, remember what I was planning was this. That's the plan. Okay, that's the plan I gave in January. It's November, for crying out loud. Okay, so it's the plan. And it was just 2 weeks of unusual price activity for this time of year. And then really maybe just back on, game on again. So I hope it goes up, but I got to be careful at this price level. That's all. Okay. I do want it to go up. That'd be a great thing. And maybe that gets us to a soft landing. And this is up would be really good. Everyone in America would benefit, except poor people because they're not in the stock market. But generally speaking, yeah, it's something like, I think, is it 60% of Americans still don't have investments in the stock market? It's like crazy. You're like, what are you going to do when you're old? Live on government money. I'm like, can you do that? Right? You can't afford to put fuel in your yacht with your government money when you're 75. And they're like, I ain't got no yacht. Ooh, should have started investing earlier. I don't have a yacht either. But the idea is, I would rather, like, I'm trying to teach my kids, honestly, since they were tiny little itty bitties, to think big, to dream big, and plan big and achieve goals. And so, no, I never brought up a yacht, but the idea, like, when you're too old to work, you want to be filthy, stinking rich. And ideally at 50, not 70, right? Even better, right? So, anyways, so that takes planning and fortitude and all that kind of stuff. So, when I see this going up, people that have deferred their short-term gratification for long-term safety, um, they're rewarded, and I want to see that happen. Cool. So we're vulnerable today on the speech, and depending on what happens, if we end up having another good week, okay, this is good because it's what I thought would happen anyways. I just didn't know the geopolitical risk. This is what they call a black swan, by the way. But we we got through the first 2 weeks, and everyone's like, Okay, it's contained, it's fine. Boom. And they go back on to making money. Okay, cool. And I hope that's the case. Peace on earth. May the pips be with you. May our profits be above average. Remember, the best way to make the stock market go up is peace on earth. Really does. We play well together, we make money together, we treat each other with dignity and respect. It's important. Cheers.